The effects of the tariffs imposed by Donald Trump, the president-elect of the United States for the second time, are starting to be felt. President Trump had said that the tariffs were intended to bring the American economy back to its old days and had started to work on this after taking office. But at this point, both the retaliatory attempts of Canada, Mexico, and China, and the fact that additional tariffs will affect the American consumer, have created a bomb effect on the stock market.
More than 100 points, the Nasdaq coming off its worst day since 2022, bouncing back somewhat, up just about 0.5%, but that certainly isn't easing the concerns about the stock market.
$1 trillion. That's how much U.S. stocks lost in yesterday's trade. It was their worst drop since September.
The U.S. stock market has lost over $4 trillion in value following President Donald Trump's
Canada's main stock index dropped today, while stock markets in the U.S. had their worst day in years.
The American stock market, which was in decline last week, started the new week with a decline, causing the $1.7 trillion American stock market to suffer the biggest loss in recent years. So, what will be the consequences of this decline in the American stock market? And will the American economy be able to bounce back in the future, as President Trump says? We will analyze the details of the latest developments and conflicts in the world. Don't forget to subscribe to our channel, turn on notifications, and give us a like to stay up to date with our content. Stocks fell amid growing concerns that the United States economy could be heading for recession. The Dow lost nearly 900 points, the S&P 500 fell 2.7%, and the Nasdaq Composite fell 4% as shares of big tech companies extended their sell-off. Tesla's shares fell 15%. Other Magnificent Seven stocks such as Apple, Microsoft, Alphabet, Amazon.com, Nvidia, and Meta platforms also fell between 2% and 5%.
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America.
President Trump over the weekend refused to rule out the possibility of the United States entering a recession this year, saying, "There will be a transition period because what we're doing is so great." In response, Commerce Secretary Howard Lutnick said, "There will be no recession in America." Some investors say the Trump administration's reckless attitude about triggering a potential downturn has unsettled market watchers, who believe Trump's pro-growth stance will boost the economy and markets. This is the first time that an administration has seriously said that the targets will lead to pain, said Shelby McFadden, an investment analyst at Motley Fool Asset Management. The jobs report signals that the labor market remains stable for now but could weaken, giving investors pause. But some analysts worry that job losses could increase as the Trump administration aims to continue deportations and government layoffs. George Cipollone, a portfolio manager at Penn Mutual Asset Management, said, "We have a radically different administration than the last one. We have a number of other concerns that could potentially take us back to a hard landing," he said. The early week decline follows a turbulent week in the markets, with concerns mounting over how the administration's unpredictable tariff policies could affect United States growth. The S&P 500 closed last week with a weekly decline of 3.1%, the biggest drop in 6 months. As of the beginning of the week, the yield on the 10-year United States Treasury bond fell to 4.21%. Last week it closed above 4.31%. The Wall Street Dollar Index was hovering near its lowest level since early November. Last week, it suffered its biggest drop in more than 2 years amid economic and foreign policy jitters. Overseas, Chinese stocks fell. Over the weekend, inflation data showed that consumer prices in China fell more than expected last month. The Stoxx Europe 600 fell 1.3%. European defense stocks continued their recent rally. February inflation indicators, as well as data on consumer confidence and job openings, will be released in the coming days. Key factors contributing to this decline include high stock valuations compared to historical averages, economic uncertainty triggered by shifting trade policies and disappointing corporate earnings. Tesla, for example, saw its market capitalization fall by more than $125 billion in a single day. Companies such as Delta Airlines have also cut their profit forecasts, citing concerns about economic conditions. Investors remain uneasy as they watch upcoming inflation reports, interest rate policies, and possible government actions to stabilize the economy. So, why are the United States stock markets falling? The recent wave of selling is being driven by multiple factors, including trade policy uncertainties, fears of a possible recession and concerns over high stock valuations. The amount of uncertainty created by tariff wars with Canada, Mexico, and Europe is causing boards and senior executives to reconsider the path forward, Lazard CEO Peter Orszag said in a statement. He said, "So which stocks were most affected by this decline? Technology stocks suffered the most significant losses. Tesla lost $125 billion in value in a single day, while Apple and Nvidia fell nearly 5%. The tech sector of the S&P 500 fell 4.3% overall. Meanwhile, Delta Airlines' stock fell 14% after it halved its first quarter profit forecasts. Investors' concerns about a possible recession intensified. President Donald Trump said, "I hate predicting these things. There's a transition period because what we're doing is so big," he said. Ross Mayfield, investment strategist at Baird, said, "The Trump administration seems to be a little more accepting of the idea that they are happy for the market to fall and may even settle for a recession to achieve their broader goals." The White House has countered recession fears by insisting that the economy remains strong despite the market downturn. Kevin Hassett, president of the National Economic Council, said, "There are many reasons to be overly optimistic about the future of the economy, but there has certainly been some volatility in the data this quarter." Hassett also emphasized that the uncertainty around tariffs will soon be resolved and that tax cuts will help boost investment and real wages. But investors remain skeptical, and continued market volatility reflects broader concerns. So what should investors watch out for next? Investors are keeping an eye on several key factors, including the upcoming inflation report, interest rate decisions by the Federal Reserve, and possible government measures to stabilize the economy. A further decline in investor confidence could drag markets down further. Many have been concerned about the high valuations among United States equities for some time and are looking for a catalyst for a market correction. Dan Coatsworth, investment analyst at AJ Bell, said in a statement. He said, "As markets remain volatile, investors need to stay informed and consider diversification strategies to manage risk. Meanwhile, negotiations to renew the United States-Mexico-Canada agreement are starting a year ahead of schedule. Commerce Minister Howard Lutnick and United States Trade Representative Jameson Greer met on Thursday with Canadian officials, including Finance Minister Dominic LeBlanc, United States Ambassador Kirsten Hillman, and Ontario Premier Doug Ford, to revisit the Intercontinental Trade Agreement. Trump negotiated it during his first term to replace its predecessor, the North American Free Trade Agreement, and signed it into law in 2020. Trump intends to use tariff threats to lure continental neighbors into negotiations. In public, he has said that illegal substances and uncontrolled immigration motivated his tariff policy. But people close to the trade talks have also said since his second day in office that his other goal is to revisit the trade agreement he once described as the fairest, most balanced, and most beneficial trade deal ever enacted into law. The United States' objective in these negotiations is not entirely clear. A White House statement said officials discussed Trump's steadfast commitment to pursuing fair trade and Canada's potential role in these efforts. The president's rhetoric offers some clues about his ultimate goals. Trump has long complained about Mexico's state-led energy policies and China's involvement in the auto industry. But Mexico has received less Chinese investment than the United States and Canada, he said. Trump has sharply criticized Canada's protections for its domestic dairy industry and threatened to permanently close its auto manufacturing business in Canada if its trade demands are not met. Ford said Lutnick had asked officials to discuss renegotiating the trade deal after Ontario's premier said he would eliminate export taxes on electricity flowing to the United States and cut tariffs on steel and aluminum from 50% to 25%. Ford said negotiations could take a long time. Doug Ford said, "It's all about building a relationship. The sooner we build a relationship, the sooner we can discuss what their needs are and what our needs are," he said. Mexican President Claudia Sheinbaum's administration has made some suggestions to the trade talks during the impasse over tariffs. These include raising Mexico's tariff rates on China to the same level as the United States. According to people familiar with the negotiations, "We prioritize trade with countries with which we have trade agreements," Sheinbaum said on March 6th, noting that Mexico imports a lot of goods from China without any trade agreement. United States automakers expect Trump to seek concessions in their favor. The current agreement requires 75% of a car's content value to come from North American suppliers to qualify for duty-free treatment. But the tariff for non-compliance is only 2.5%. Some automakers pay this and export cars to the United States instead of complying. Some United States lawmakers from auto-producing states have said they want to raise the tariff to penalize foreign automakers without hurting North American trading partners. Senator Bernie Moreno said the tariff for non-compliance with the USMCA should be 10 times higher. This would be in line with Trump's planned 25% tariffs on global auto imports, which he said would be implemented on April 6. Some Republican senators said more uncertainty could derail the deal, hurting market sentiment and corporate profits. Senator Tom Tillis said, "This is about improving a deal that President Trump got in his first term. But if someone is thinking about a blank slate, I think that could be destabilizing." He added, a 25% tariff on goods imported from Mexico and Canada went into effect on March 4th, while a 10% tariff was imposed on energy products and potash. The next day, the Trump administration suspended those tariffs until April 2nd for automobiles eligible for duty-free trade under the United States-Mexico-Canada Agreement, or USMCA. On March 6th, all USMCA-eligible goods received the same suspension. Many goods entering the United States do not comply with the USMCA and are therefore subject to the new tariffs. Canada responded by imposing $21 billion in tariffs on United States products, including fruits and vegetables, appliances, and liquor. Canada also said it would impose an additional $20.6 billion in tariffs on goods imported from the United States in response to Trump's steel and aluminum tariffs. Mexico initially planned retaliatory measures, but did not enact them. On March 12th, the Trump administration imposed a 25% tariff on all steel and aluminum imports. Canada then retaliated by imposing tariffs on $20.6 billion worth of goods imported from the United States. The European Union responded by imposing a 50% import duty on American whiskey, motorcycles and motorboats from April 1st, and additional duties on American chewing gum, poultry, soybeans and other goods from mid-April. President Trump responded by threatening a 200% tariff on alcohol from the EU. Meanwhile, on February 3rd, the Trump administration imposed an additional 10% tariff on goods from China, in addition to various tariffs imposed during the Biden and first Trump administrations. China retaliated by imposing tariffs of 15% on US coal and liquefied natural gas and 10% on crude oil, agricultural machinery and other products, all of which went into effect on February 10th. On March 3rd, Trump again raised tariffs on Chinese goods by 10%. China retaliated again with tariffs, including a 15% tariff on US chicken, wheat, corn and cotton, and a 10% tariff on sorghum, soybeans, pork, beef, seafood, fruits, vegetables, and dairy products, which took effect on March 10th. China also penalized 15 American companies by restricting exports to them. Trump also threatened to impose a general 25% tariff on goods from the European Union, but did not enforce it. On March 4th, Trump said that on April 2nd, the United States would impose so-called reciprocal tariffs on any trading partner that imposes tariffs or other trade barriers on United States products. Trump said the reciprocal tariffs would be the same as the trading partners' tariffs, and indicated that the tariffs would apply to the European Union, China, India, Mexico, and Canada. However, the actual implementation of the tariffs is expected to take 6 months or more from the March announcement date. So, what do you think about this? Let us know what you think in the comments. Please don't forget to subscribe to our channel and turn on notifications to be informed about new videos. Thank you for watching us.